Welcome to Market Buzz. I'm Greg Schnell, the Canadian technician and host of the Market Buzz. Each show we do a deep dive into different industries using weekly charts to see what is happening on a long timeline. Please follow me on Twitter at Schnell Investor, and you can also find my blogs on gregschnell.com as well as stockcharts.com. The market is struggling this week, and it's trying to figure out which way it wants to go. We've got a little bit more volatility ahead of us with the Fed meeting in the afternoon, and then we've got Thursday some selling of options to get ready for options expiration on Friday. So lots of things going on over the next few days to just kind of keep us twisted. Today I want to cover off electric vehicles because there's a lot of good things going on, a lot of messy things going on, and I want to lay it out very clearly. We all know that electric vehicles are expected to ramp up quite nicely. Ford just declared that theirs are going to ramp up really well. The Mustang is doing great, and then they also have their electric pickup truck, so that's working. Now we've got Tesla out there, we've got Lucid and Rivian that just came to market. So some different things to look at, and I think it's timely to go through the charts. So let's rock through that. And if you're interested in more information about gregschnell.com, you can head over to the website, go to gregschnell.com/explore, and you can find a discounted rate there for $4.97 if you're interested. I think one of the most important themes sitting back in 2022 will be being aware of how the market changed late in 2021 and what we're going into, and making sure that you have a trading plan around a different market than it has been for, let's say, 20 months. Anyway, with that, go over to the stock market. What I want to cover off briefly here is the Nasdaq 100 is trying to get going here, and it looks like it's collapsing, and then at the last moment, in the last 2 hours, it turns up quite nicely. PPO's declining, could come in here, make a higher low, and take off to the upside. That would be very bullish. Trying to bounce off the 50-day moving average. Again, it's just choppy in here. It's been choppy. We had kind of 2 days breaking above the early November highs and then came crashing down quickly. The bigger issue we've got here is that a lot of parts there's a lot of moving parts. We've got the current vaccine variant ramping up, Omicron, and then and those types of things can really add up for us. So I think the bigger issue as we look forward, we've got oil dropping, trying to figure out why oil would be dropping. I don't have an answer for it. But I think the main thing that I would like to be aware of is what made oil drop $20. There's obviously something in the background that's changing things, and oil doesn't usually just drop for no reason. So the commodity traders are pretty sensitive to economic situation. So I'm not sure if it's global mess or if it's just local. I still see a lot of tightness in the oil supply situation. So I'm expecting that to be more of a hurdle. But we're starting to see these stock markets roll over here and become really odd. And some of the charts I have set up for you today also lead into that theme. So we're going to see a common theme on a lot of these charts. Many of them topped in February after the big kind of surge, and we had the SPAC momentum going on in that period of time. But when they all took their big run into that SPAC high, we had a huge volume component on the Nasdaq, not so much on the Nasdaq on the Nasdaq 100, but on the Nasdaq Composite, because all of these names aren't on the bigger picture. But the point I want to make is we had a huge surge in the volume that came into the Nasdaq Composite, and it's that change, that I'll call it euphoric climax that we've had. And now we're watching how these charts are setting up, and some of them are starting to change. Many of them have been in a straight decline since that point. So this was a $12 stock and went all the way to $2. That's pretty hard to own. And then when we get into, this is BMW, and what you see here is BMW sitting not on the first trend line, but on a much flatter slope. And it's just trying to hold on to its 10-week and 40-week, which is a little bit surprising based on some of the success we've heard out of Ford. That chart's been roaring a little bit better than this. So what you'll find as we go through these charts is we're starting to see a common theme of all of them just gently sitting on their trend lines or having broken them. And the real question is, can they get enough power to get going again here, or do they all roll over one more time? This is BYD Corp, and you can just see I've got the trend line pinned right on the March 23rd lows here, touching in here, a little farther away from in here. So if I moved it up against those bottoms, we'd be clearly out of there. But again, this one's just starting to break down through the 10-week moving average, but it's also breaking down through the long-term moving average. PPO is rolling over here after a double top on momentum, couldn't really get going. It's still at a pretty high level, right? PPO of 7.5 is still pretty strong. I start to think down around 2 is really weak in an individual stock. But the one thing I would say is it's starting to underperform the S&P 500, and its trend of outperformance is changing. So that's a pretty big decision on this stock after a 20-month run. Churchill Capital was the SPAC that set up the Lucid Group. And I think the bigger thing here, notice this Twin Towers structure where we come back and we retest the prior highs, and it's trying to bounce here, but this is very volatile, right? 60 to 35. That's a pretty quick swing in 4 weeks. And so far this week, it's holding on the inside. And even though we've had 2 down days to start the week, it is trying to turn a little bit higher. So this one at least is looking a little more positive on, I'm recording this Tuesday night after 2 down days in the market here. So this is Arrival, and what happened on Arrival, you can just see literally came out of its SPAC period and shot up to the highs. And when it shot up like that, it was really making a big move. But the problem we have now is this is just a series of lower highs and lower lows. And it doesn't look like it's going to get any momentum anytime soon. So, yes, it's a new Arrival, but the big thing, I would just let somebody else build the base here and try to keep working around it. Here's Daimler, and this is Mercedes. So what you see, remember on BMW, it was sitting on that long trend line. Well, Mercedes has already broken that long trend line, and it's also broken the relative strength compared to the S&P 500, which is a real problem. The main reason that we'd like to see this hold up, obviously, is if all the German car manufacturers are starting to turn down, that's a bigger clue for us that we could have more trouble ahead. They're in the luxury car market typically. They also have dominated across. They've done well in China, but they have a large presence in North America as well. So something's all of a sudden changing that these charts are breaking. And I think that's a critical thing to be aware of. This is found in the XLY part of the stock market, so the consumer discretionary. And we're seeing these charts after being in pretty strong uptrends, all of a sudden in the last 2 weeks really starting to break down. And what you notice here is a lot lower momentum on this high, even though price was at a higher high. So to us, that's called divergence. And we don't want to see that because usually that means it's weak. But for me, we've got the PPO rolling over at a much lower level. We're breaking our uptrend line of relative strength. And you can see when we broke the one that was up in here, that 3 or 4 months of pullback gave us that change from 98 to 80. Here we went from 103 and we're already back to 80 already. So the quickness of the move down is accelerating, and we just need to be aware of how fast these charts are changing. Now, Ford came out with some pretty good news last week where their Mustang is doing very well. It's still outperforming the S&P 500, which is nice, but we had this big pop up and then an immediate reversal. So for a technician like me, to me, this looks like a failed breakout above the 2079. We're holding in this range. Let's just call it 7 weeks that we haven't really gone anywhere now. But we don't want to start to see these trend lines, upsloping trend line break. And if this is starting to break here, that would add pressure to this chart. Now, this is probably the best chart out of all of the car business. So if this chart's going to start to roll over, that would be like kind of the final leader rolling over in the space, which would just kind of confirm what we see on a lot of the other charts. Anyway, at this moment, Ford is still standing, looking pretty strong. This is Stellantis, which is the Chrysler group. And you could just see it's sitting here building a little bit of a head and shoulders topping structure. Hasn't gone anywhere for most of the year, kind of where it was at the end of February. And looking at Arcimoto, this one was a big story in 2020, so it ran up from 97 cents to $36. If you had the courage to buy the breakout on the downtrend, it was a pretty steady, heady rise to the upside. Now it's sitting on this horizontal support that goes back to July of 2020. That's quite a round trip if you didn't take profit. So you've gone all the way up to 36 and back to 8. Really hard to hold that. If the overall market was going to start rolling down here, I would suggest that this probably keeps going. The Geely Group out of China, still holding the big uptrend. Nothing really crazy about the chart. I would just point out that it too made its highs back in January, February, and then lower highs now. Momentum is just barely above zero. We don't want to see this start to decline. It's been underperforming the S&P 500 for the last 6 months pretty much, but Chinese stocks have been out of favor. General Motors trying to hold this trend line and sitting right up against this test of the prior high. So in November it ran up, tried to break through the prior highs, briefly made a higher high, and then rolled back down again. So far it's a failed breakout. But I think the bigger issue that we're starting to see on this chart is relative strength compared to the S&P 500 is breaking down. And you've got this big sweeping downtrend in momentum. And now after a bounce, it's barely getting above zero. And it looks like it wants to go back down again. So that is more problematic for me. That chart looks weak, in my opinion. Luminar Technologies, laser guidance systems for cars, driverless cars. The chart's just ugly, 47 to 15, and it doesn't look like it's going to give us a Christmas present at all this year. Here's Canoe, and what we see on this one is there's an uptrend here that's been going on for the last 3 months, but it looks like it's breaking this week. PPO rolling over under zero or at zero. That's very bearish. Don't really want to see that. So to me, this one looks like a big caution flag, and we're down 8% on the week, and it's only Tuesday. Green Power Motor Company, again, $43 back to $15, so a 70% drop or 65% drop in the stock. It looks real rough here. It hasn't broken down for the last 6 months, but it did close so far on Tuesday at new 52-week lows, so that's just got to be considered ugly. Honda Motor Corp, this chart's been breaking down more than the other Asian Japanese manufacturers, and I'm a little bit surprised by that. But we've actually got the 10-week below the 40-week. That's not exactly a bullish posture, and it just continues to be ridden down every couple of weeks. Makes a lower low. Harley came out with some announcements this week on Monday, shot up, and that couldn't even hold up for the day. Turned around, and now on Tuesday here we have a lot higher volume, but no real move out of the price zone that we've been in. So 35 to 40 continues to dominate. Looking at Helion Holdings, and if I remember right, this is a sleek looking car, kind of like a Lambo or a Ferrari, that's really high end. And the problem with this one obviously is $58 to $5. Nobody kind of believes the story, down 90% from last fall's highs. So 15-month period breaking down 90%. Candy Technologies, so this one up at a high level here, breaking lower down to $3. You got these huge spikes on the chart, and if you don't try to take profits out of those when you get a double in a week or something, it's a pretty important place to try and draw a trend line or some sort of an exit strategy so you don't get caught in this. But I think the bigger issue here is this is just downtrending from, I'll call it 10 in February or January down to 3. And it doesn't really show any signs of abating here yet. It's not like the chart's starting to base. LI Auto sideways, which isn't bad considering some of the other ones are dropping, but it's not going up either. And then looking at the Lion Electric Company, this one was $35 back in January, down around 9 something. Again, just when you get these sudden parabolic moves, the best part about them is trying to take profits out quickly. Neo, one of the Chinese SUVs here, up at $67, now at $30. A little bit of a haircut there. That's about 50% off. Car probably doesn't have that big a discount. So at this point, what would attract me to the stock? It has to start behaving better. NIU Technologies, this is a scooter company, $53 to $17. That's a pretty short ride on a scooter, down 70%. And then looking at Nikola, this one was the classic story, right? $10 to $94. Just a huge move up, and yet people didn't take profits up there and now might have ridden it all the way back down. It's trading below kind of the big breakout when it first got merged into the SPAC. So really not a good look on that chart. And then here's Nissan Motors. The one thing, I should have drawn the trend line here, but the one thing I can't figure about Nissan is if I draw the trend line in here, we're just starting to break down, but it really hasn't done anything all year. Unlike, Ford or GM, they've been perkier. And then Toyota Motors has been up nicely. Honda's been leaking lately, but Nissan really hasn't gotten out of bed since November, so last November. And here we are now breaking the trend line. So that car company looks a little bit more in trouble than I might have expected. Ferrari, they're only hybrid, but they'll be electric. They're hoping for 2025. Big surge here from 205 to 278 in just under 6 weeks. So that was the nice push off the October lows. And now this kind of 3 or 4 week pullback off the highs, trying to hold the 10-week. I would say if it gets down to this 230 level, maybe you look for support there. But if the whole auto group is having trouble, it might not be worth stepping in. Ride, Lordstown Motors, and I'd say this has been a ride. So it was a SPAC, again, breaking out in August, running from $10 to $30, so just a couple 100% there extra, and then chopped around wildly here, but kept trying to get through this 31, 37 all the way to the, I'll call it SPAC top, and then in early February, hits 31.57. Now we sit down here with a 357 handle instead of 31.57. 90% drop. Really hard to step in front of this. Is there any reason to buy it? I don't see it yet. Solo Electrameccanica. These are one passenger cars. They actually sell them. Seen them on the street. This is $13 last November. Made a lower high on the February, call it SPAC high, and then breaking down here to 240. Again, this one's almost 90% off, 80% off. I think the real question is it's hitting new 52-week lows. It's really going to have to change its sales cycle if that's going to change the chart. Now, Fisker, I think the most important part here is just how hard is it to hold this stock when it's moving, 10 to 20, 18 to 8 to 23 to 14 to 31 to 9. For me, there's just way easier trends to follow, and at least you know what you're going to wake up with tomorrow morning. So that's the kind of stock that until it starts to smooth out, I don't really want to own it. This one was classic. They were a SPAC, and they started to announce that they're going to build an electric vehicle and new charging technology. And, all of a sudden somebody goes, wow, this is going to be great. And it literally goes from $1.25 to $46 in a week. And all these investors pile in. It plummets and closes the week at $12. And look what it does. It has done nothing since then. And so here we sit at $4. All of those people keenly interested in, and this is probably the most dangerous spike on the chart, because it starts to wobble, and now all of a sudden it's starting to break out to new highs, and then it collapses quickly, gets back up here again, and looks like it wants to go, and then fails. Very difficult to kind of step in, hold through a lot of volatility, right? This is 1260 in January. And by, the end of February, early March, you're sitting looking at a $6.40 handle. That's tough timing. Anyway, my big point on this, the big announcement, there was nothing behind for the most part, and this thing has run down hard, and the whole sector is breaking down, or industry group is breaking down, so now it's going to be even harder to collect profits. I mentioned the Nissan chart was pretty weak. Well, here's the Toyota chart. And it's been a steady stream higher. And again, Toyota's had the Prius for a long time. They know the electric car business. So I don't think anybody's going to get surprised there. They're doing a lot of work to move to hydrogen from electric. They're already kind of done the electric car thing. The chart is still intact. Everything looks great. I would just say so far it's just a consolidation. But look at these 5 tests of the prior high, or 4 tests of the prior high. It just keeps trying. Eventually, hopefully, this will break out to the upside. Momentum's waning a bit, but that's still a pretty strong chart. Okay, and again, the main reason to just go through all these is some of these charts are starting to crack, and this is one. So here's Tesla with the big long trend line. I used the closing low here in March, not the absolute low from COVID, but this is an uptrend that's just starting to crack this week. And again, Ford's coming out with new products, Lucid and Rivian, and all these other ones are coming out with new cars. GM's got a model, their Hummer's coming out shortly. So there's lots of competition in this space. Of course, the Europeans aren't being left behind either. But you see this big downtrend. PPO giving us a sell signal this week. So far, it's Tuesday. We wouldn't get a sell signal till Friday. But I think until market close on Friday, because it's a weekly chart. But the big thing for me is when you have a parabolic surge like this, your best, well, if you're a long-term investor, you can do whatever you want. But if you're trying to trade for profit, to me, the big thing I want to see here is when this parabolic surge finishes, I just want to take my profits out as quickly as I can. And in this case, it would have been helpful. You'd have been up around 1,200 kind of thing. And now you're down around 900. 25% doesn't look like much on this chart because it's moved so far. But that's a lot of money to give back quickly. And again, we're making lower highs in momentum here with a sell signal. I don't know how far this chart moves down. The interesting part is that for the last 6 months, Bitcoin and Tesla have traded very similarly. Really, really odd situation. So here's Volkswagen, and what you see is big push up to $47 and then nothing, literally sideways. So Daimler, Volkswagen, and BMW, nothing really going on the charts. I mean, they aren't bad, but they just literally haven't done anything for a while. And coming into our last 2 charts here, we've got Workhorse Group. This one I think was when they lost a contract for Amazon delivery trucks or something like that. And all of a sudden it dropped down hard, but $43 all the way down to $5, 85% loss or something like that. These are just hard to get behind. So be very, very careful when if the overall market's going to break down here, this is kind of one of the reasons we need to be careful. We think these are all done. They can go all the way down to 60 cents. You can drop another 90% from the $5. So here's Worksport. This has just been a really choppy ride, right? Every 6 months, some sort of an announcement comes out, but the chart just keeps going back into selling mode. So not a really good reason to get in there and own them. So if you're interested in the automobile business, right now it doesn't look like the area is set up for us. Again, I think the best chart in the space is Ford, and that chart, really nice move from 12 to 20, right? That's just awesome. You get that 50% move. It's hard not to take the profit if you see the overall market rolling over. So one of the big pictures that I like to always watch for is when the overall market starts to roll over, the rest of this industry group, I think it would be fair to say, is rolling over. You need to decide how you're going to protect your profits to make sure that you keep them. You've just had a 50% win. Do you really want to let that wash away? Okay, so hopefully that's the that's helpful to kind of go through those cars and why it might not be the right time to jump in. The last thing that I'd like to point out this week is just that one of the charts that we've been following at gregschnell.com has been the bullish percent index for the Nasdaq and the percentage of stocks above the 200-day moving average. And we're down here in some pretty low levels where typically we have a big 20% drop in the stock market, and that hasn't really happened yet. And this green line down here was Friday's close, but we're down around 25 or 26% of the stocks are above the 200-day moving average. What I notice on this chart is most of the time after that, you get these big multi-month drops where the stock market actually corrects quite hard. I think our backdrop is low enough. That's probably what's coming next. But again, we've got to take it 1 week at a time. So with that, thanks for taking the time to join me on Market Buzz. Market Buzz airs Wednesdays at 10:30 a.m. Eastern Time. You can also see the recordings on StockCharts TV YouTube page. Thanks for taking the time. Have a great week. Bye-bye.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.